Hi, welcome back to Ask an Actuary. Today we are jumping into a discussion about the significance of balance sheets for small business owners and kind of gain a clearer understanding of the main components and break it down. Explaining that today will be Kurtis Thompson, a seasoned actuary here at Odyssey Advisors. Thanks for joining me, Kurtis.
Yeah, thanks for having me.
So, first, let's jump into why it's important for small business owners to understand their balance sheets.
Sure. Yeah, I mean, it's a great question because a lot of small business owners, especially, don't really look at balance sheets, income statements, cash flow statements, don't think about it. And there's a lot of information that can be gleaned from that. Warren Buffett is quoted as saying at one point, accounting is the language of business. So if we're trying to run a business, but we don't speak the language, we're not going to know what to do, when to do it. We might not understand what's going on, when it's going on. So, broadly, that's kind of my answer. More specifically, there are several things that matter, especially for small business owners. One thing is that, especially as we look at the balance sheet, that really matters to most small business owners. A lot of small business owners are not really building a business they're going to sell at some point. They're building a business that when they are leaving, the business will kind of wind down. And a part of that, why that makes the balance sheet so important is that, we'll get to, but on a balance sheet, you see assets minus liabilities equals equity. And so, it would be equivalent to looking at your personal net worth statement and saying, if we liquidated this business today, what would I get from it? And so, most small business owners should care about that. Another element that I think is helpful just as a small business owner in terms of trying to run your business is that you can use the balance sheet in conjunction with the income statement and cash flow statement, which we'll get into in a couple future videos. You can use them to ask questions like, how many times per year do we turn our inventory over? That's a pretty nebulous question, but when you look at it in the data and you can see, like we have X amount of sales in a year and we have Y amount of inventory, you can see how quickly you turn your inventory over to some extent. You can also ask questions like, how much income are we generating with our equity? Like the assets that we put into the business, like what's the return on those assets? Are we getting a reasonable return, or should we just sell the business and invest in the stock market? And obviously, like people are probably not going to do that. Your business is generally something you enjoy or you love or you get other things out of. But there are those pieces of information hidden within your balance sheet. And if you know how to read it, how to understand it, and how to use it, you have a leg up on a lot of the competition.
Now, can you walk us through the main components of a balance sheet?
Yeah, absolutely. So we're going to pull up a sample balance sheet for everyone to look at with us, and we'll walk through the main elements. The first thing that you can see at the top of the balance sheet is that when you put together a balance sheet, it will have a date on it. And a balance sheet is a snapshot. It's a picture at one day, like at one moment in time. And so this obviously can change every day, but we're going to look at it on one day. And so, at the top of this one, you can see this is December 31st, 2020. And you'll usually see balance statements, stated quarterly or annually, something like that. So as of this date, we'll learn information about the business. Broadly speaking, there's three things on your balance sheet. You're going to see assets, liabilities, and stockholder equity. And so you can see those large title headings on this balance sheet. Why it's called a balance sheet is because the equation balances. And so often it's stated as assets equals liabilities plus stockholder equity. And it will always balance. If it's not balancing, there's something wrong with your balance sheet. Like that's the point of the sheet. It balances. Now, I don't know why it's always stated as assets equals liabilities plus equity. I find it to be more helpful to think of it as assets minus liabilities equals equity. What I own minus what I owe equals what I have right now. And so you can see those elements on this balance sheet. We have our assets, we have our liabilities, we have our equity, and you can see that at the bottom it shows on the bottom right, we see total liabilities and stockholders equity, 770,000, that equals the total assets. So good thing our balance sheet balances, we can trust it, we can say this actually works. So walking through some of these elements in a little bit more detail on why they matter, we can start with the assets. And when you look at assets, it's going to be broken into a couple different subheadings or subcategories. And what most business owners care the most about is current assets. And that's what you're going to see first. Current assets means what assets do you own that could be turned into cash within time frames vary depending on who you ask, but 90 days to a year is generally that like current asset, and then anything that cannot be turned into cash that quickly would be a long-term asset or not a current asset. And so as you look through this sample balance sheet, you'll see cash, short-term investments, treasuries or something like that. And then the third item on this list is something that small business owners should really pay attention to, which is accounts receivable, how much money you are expecting to be paid. And it matters in many ways as you look at accounts receivable versus accounts payable. The bills that I know I have coming due, are they less than the income I expect to receive in the short term? That's an important metric. Even just that, if you understand that on a balance sheet and look at it quarterly, it can help you make decisions about your business. Is the money that I'm going to be bringing in plus the cash I have on hand going to be enough to pay for the bills that I have coming due? So that's super valuable information. Another thing you can see it depending on your business, you're going to have inventory. So if you're running a shop and you have a whole bunch of widgets, that's all going to be your inventory. As I mentioned, when you start combining the income statement and the balance sheet and the cash flow statement, you can ask questions like, how many times per year does my inventory turn over? If I have $1,000 of inventory at any given point in time, and I have $120,000 of sales, I know I turn my inventory 4 times a year. Useful information to have. Moving on from the current assets, you get into the longer term assets, things that are a little bit harder to sell. So you can see land, building, and equipment. And so, we all understand these things as assets. If you own a building, you could sell it and, generate some income from that. You're hoping ideally that that building is being used to generate revenue for you, but you own it and you could sell it. One thing that small business owners can, get confused about is depreciation. It's one of those accounting items that it's real because it's an accounting item, but it's not real in terms of most people's experience. But you'll actually see that we get to deduct it on the income statement. And so you get to deduct it on the income statement and then shows up here, essentially saying, our equipment is, $200,000, but we've depreciated $56,000 of it. So if we were to sell it, we don't expect to get the full $200,000. We have some depreciation, over time that equipment has to be repaired or replaced or whatever it is. The last piece that we see here is intangible assets. That's something a lot of small business owners aren't necessarily going to deal with, but you can end up with things. A great example of this is, let's say that you own a patent, right? You have created a patent for something. Well, that's an asset technically, but I can't put my hands on it and say, like, here's the patent, right? It's an idea, it's a concept. And so things that you own, but you couldn't necessarily put your hands on it, you could still sell it. And so it's still an asset. Goodwill, most businesses, unless you buy some other company, you're not going to end up with goodwill. So we just ignore that for today. And at the bottom, you can see it all adds up, and this business has almost $800,000 of assets. Then you move on and ask, okay, what kind of liabilities do I have? And an interesting question to ask is, we already talked about it a little bit with receivables, but are my current liabilities, like the liabilities that I have coming due within the next 90 days to a year, are they greater or less than my current assets? That's asking the question, can I pay my bills? So it's always a good thing to be able to do. Businesses could have a great, business model, but if they can't pay their bills, they don't stay in business. And so again, you look at your current liabilities. Those are things that are coming due in the next, short period of time. So you need to have cash on hand to be able to pay for those things. And we don't need to go through those things in detail. They're going to vary for every business, but you can see liabilities that are due within the next 90 days. Long-term liabilities, those are things that you're going to have to pay in the future. So you don't need cash for them on hand today, but you are going to have to generate cash in the future to be able to pay for those things. And so you can see total liabilities, add up those short-term plus long-term, and you see $480,000. Now the the interesting point or the most important part is the equity. In equity, you just take assets, subtract liabilities, and you'll end up with equity. How much money you could get if you liquidated everything in the company today. And so you can see at the bottom here, you have about $300,000 of equity in the business. And there are various line items on there. We can get into them in a little bit more detail as we talk about income statements, because these two things do cross over and they're linked together. And so you need both of them to be able to understand each one. But at the end of the day, this is telling us how much the book value of this company is. And then again, like I said at the beginning, we'll start and end with the same idea. Total liabilities plus stockholder equity equals assets. So our balance sheet balances, it works. And we have a snapshot of what this business looks like on December 31st of 2020. Another idea on here is that this gives you a snapshot in time, but it's valuable to look at the snapshot at different dates. So you can ask the question like, is my equity increasing, or is it decreasing? If it's decreasing, that's saying we're having liabilities increase faster than assets, and that could be a problem. And so that's another way, that this could be used to help a small business owner get valuable information that they could do something with. And so that's a very high level overview of a financial statement. You can see like this has a note at the bottom that says accompanying notes are integral part of this statement. Because we're doing a high level overview, we're not going to get into notes, so don't worry about notes. We'll just talk about the big things, what you need to know, and hopefully that gives you some information on what is the balance sheet and how you can use it.
Awesome. That was a great overview, Kurtis. And that's all we've got today. Big thanks for coming on to talk about that. And hopefully, that shed some light for business owners and anyone who's interested in learning about balance sheets and how to read it. Because I know I definitely learned a thing or two. And for our viewers, the next couple segments, like Kurtis mentioned, are going to be about income and cash flow statements as well. So keep an eye out for those once we get those up. If you have any other questions at all, or just want to geek out with us on some actuarial topics, you know where to find us. Until then, we'll see you again.